Hello everybody. So this is my third 52-week high video for HIMS in just a matter of about 2 weeks. So yes, we are sitting at a 52-week high still. Now it's $55. When I did the screenshot, it was 52. It went up almost $3 in a matter of less than an hour or something. Anyways, we continue price discovery. I want to point out that it looks like a squeeze to me. I'm not a technical trader. I don't do technical analysis. But experience over the years, you tend to see these patterns and the way the stock is moving. To me, it sure looks like there is some sort of a squeeze, especially as I look at different sources. 27% squeeze, Seeking Alpha says on hims and hers. Finviz is saying 33%. This is a stock that has a history of being shorted by money managers, by Wall Street. It looks like some sort of a short squeeze to me, but if you're a specialist at TA, feel free to weigh in the comments. What I'm trying to answer in this video is it overvalued? Because this is my wheelhouse. Valuation, fundamentals, this is what I love. Is it overvalued? Right now, enterprise value over gross profit over revenue growth for HIMS is a 0.2. So note, it was a 0.17 the last time I covered HIMS a few days ago. Now it's a 0.2. The stock is way up today. I wish I could tell you it's expensive, because for many of you, I'm sure it'd be an easy thing to hear, and then you could be like, okay, I'm going to sell. But I can't say that. I don't think it's expensive at a 0.2. If you follow my channel, if you've been following it for a while, you know I never call a stock that's a 0.2 expensive. I'm nearing a 10x myself. Yeah, it's tempting to sell. But this is obviously not what I'm doing, not what I'm going to do. If it's a 10x, fine, moving on to a 100x, right? That's the way I look at this. The truth is that the stock is just not that expensive yet. I estimate that a quote-unquote fair value or I would be interested in this stock up to a 0.3. So 0.3 on enterprise value over gross profit or revenue growth. That'd be still about 50% upside until we get to a potentially fair value of $75, which is what interests me. I start getting interested in a stock when really it is a 0.3 or under. And if you look at other stocks in a similar place, for example, look at Talkspace. Talkspace is a similar play, but specialized on mental health therapy. They don't ship drugs. Although they do have some prescriptions. It's a very similar business in my view, but only focused on mental health. It's trading at a 0.28. So Talkspace is trading at a 0.3, which is what I feel is fair, and that's in the direct-to-consumer healthcare, traditional health disruption sector, which is the sector that I identify HIMS in. And so if you even compare HIMS to other sectors, for example, let's take another stock that's a leader in its field, Robinhood. You can see Robinhood is a 1.34, so HIMS is nowhere near that. And if you look at another stock in AI, which is also disrupting its own sector in AI, and heavily debated stock, Palantir. Palantir is a 3.6. So we're talking at a 0.2 on EV over GP over RG, which is my modification of a PEG ratio. So I don't think HIMS is expensive in any way. I selected Palantir and Robinhood as potential comparisons of hot stocks, quote unquote hot stocks, because if you look at the pattern, they've all had very similar pattern. HIMS is up over the past 1 year, 480%. HIMS is up. Robinhood is up 442% over the past 1 year, and Palantir is up 390% over the past 1 year. So as you can see, HIMS is doing the best among these three. But let's not get our hopes up too fast. This is clearly a squeeze in my view, in my opinion, or I could be wrong, but it seems like a squeeze. So what I want to point out is HIMS could be getting a little bit of itself just because of the speed of the move. But HIMS has a history of trading into a range. And the range, if you follow the stock for a while, like I have been, between $15 and $30, that used to be a range for well over a year. And I know from the comment section, many of you would sell it at $30 and buy it back at 15 and sell it at 30 and bring back at 15. It's a game. Trading is a game. Playing is nice. Well, maybe right now, when new range will be between 30 and 60. I have no idea. Is that going to be a new range? But I just know this stock has a history of trading in a range. HIMS is a 10-year hold for me, and so if it's going to trade in a range going forward, I want to add to the lower end of the range and not the higher end of the range. And so my advice is be careful. I would be very careful about things like writing covered calls, thinking it's run too much, and then boom, you end up selling all of your shares and you end up having a capital gain stacks. If you're in a situation kind of like me where you're nearing a 10x, don't take a 10x when there could be potentially 100x on the table, because the disruption of the stock is in my view going to be enormous, and I think it's just getting started. I think the market is getting excited about a little something called GLP-1s, but if you follow this business for a while, that's just one of the many businesses they do. The market, in my view, could be slowly realizing that HIMS is actually a 0-to-1 company, just like Robinhood, just like Palantir. HIMS is a 0-to-1 company. Why? They have a stunning user experience. It's easy. They are loved. It's unlike anything that has ever been seen in healthcare. It's easy. It's a single app. The single app has the medical advice in the form of a doctors. The single app has the pharmacy, and the single app has transparent pricing where you know exactly what things are going to cost, and it very often costs less than your copay. Right? When HIMS charges $169 for say a select customer for a GLP-1, and then you have Eli Lilly charging $1,900 for a GLP-1 as well, right? What do you think your copay is going to be on $1,900 a month for a drug? I'll give you a hint. That copay is very often going to be higher than the just under $200 that HIMS charges for GLP-1s. Well, that's the same for most of the drug that HIMS charges. So you have the best UX. It's an app. It's easy. It's convenient. It's right away. You see a doctor right away. It's the Amazon way of being. And the app has the doctor, the pharmacy, and the transparent pricing. You don't have to go through the learning curve of understanding the insurance system, i.e. medical doctor offices, i.e. pharmacies, i.e. insurance companies. This is a curve that a lot of Gen Z, a lot of millennials don't want to have to go through. And if they give up that curve and they don't go through that curve, they don't go to CVS, they don't go to the physical pharmacy, they don't go to the family office, what do they get? They get transparent pricing and they get cheaper pricing. And also, and this is another thing that I think a lot of people are realizing, is that the business innovation of HIMS may become the norm. It may become standard, which is the idea that it's the price of a medication that pays for the doctor visit. And if you can't get help, you don't get charged, which is what the new customer is getting used to. If Amazon is out of stock, Amazon's not going to charge you for the product. If a restaurant is full and you can't eat because they're full today, they're not going to charge you because they're telling you that they're full. You don't need to charge for that. The way we charge for doctors is entirely antiquated. It is not the way of the 21st century. The way of the 21st century is if you don't get a service, you shouldn't be charge for the doctor. And that's one aspect. The other aspect is, I think, that it's an efficiency behemoth, and the market is realizing that I talk about LifeMD sometimes on this channel, another stock I like in the sector, which is much cheaper, by the way. But HIMS is an efficiency behemoth. We're realizing that we can use, in the case of HIMS, they have 2 automated pharmacies. Much of them do compounding. You can use automated pharmacies, very, very few employees, 2 very large facilities, and you can do custom pills, you can do cross-selling, you can do a whole bunch of stuff with just a giant warehouse. We don't need $45,000 pharmacy. I know CVS is up, but I'm sorry, when I look at the debt at CVS, and when I look at their intangibles and the mind-bogglingly silly amount that they put in intangibles on the value of their brand, it makes absolutely no sense. These books are upside down. No financial advice, right? Just entertainment, just my entertaining thoughts. I don't see that when I look at HIMS. When I look at HIMS, I look at a pristine balance sheet with no debt, with absolute efficiency, with automated warehouses, automation. The facility they bought in Los Angeles recently to start also manufacturing their own GLP-1. They're going to manufacture the generic for Victoza, liraglutide, which is the off-patent GLP-1. That's also something that they can do. So you have full vertical integration. You can do everything. You can be a Teva, i.e. a manufacturer of generic drugs. You can be a CVS, i.e. the pharmacy. You can be the doctor office, i.e. the HIMSS platform when you talk to the doctor. And you can be the insurance, i.e. you remove the insurance from the equation by making your product cheaper than copays, So the market may be noticing this is going on HIMSS, and this is a much bigger story than the GLP-1s. Now, I'm not giving this much credit to Mr. Market. I think the stock right now, at least let's say the pickup in steam of the stock of the past 5 days, let's say, I think it has to do with the Super Bowl. I think it has to do with narratives around GLP-1s and probably narratives around the squeeze. But over the long run, I have to believe that some of that rise in the stock has to do with the fact that the market is noticing the quality of this company. This is a long-term hold. I'm going to hold it for 10 more years, so subscribe to the channel if you want more info on this one. This was not investment advice. This was not financial advice. This is just entertainment. Hoping you were entertained. Please like, please subscribe. Follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.